The right way of selecting mutual funds for SIP. When it comes to investing your monthly savings in a disciplined manner in equities, Systematic Investment Plan (SIP) in mutual funds is the most convenient way. Mutual funds are managed by professional fund managers, and hence they come at a cost. However, building a portfolio with the right funds is your responsibility. Not an easy task when there are so many to choose from. Watch the entire video to learn the right way of investing in mutual funds. Actively managed funds cost more than index funds, so it makes sense to invest only in those funds that generate more returns than their benchmark index. But what returns do you look at to make the right comparison? Examining past returns doesn't work because it has a fixed start and end period. For example, the 3 years past returns for funds are very high, simply because of the starting point where the market had sharply corrected due to COVID concerns. What you need to look at is average rolling returns. The average 3-year rolling return, calculated on a monthly basis, indicates the average returns achieved by the fund if one were to invest in a SIP every month and hold on to it for a period of 3 years. 2 things determine which fund you should SIP. Firstly, well-performing average 3-year rolling return over its 10 years demonstrates that the fund can deliver results through economic and market cycle fluctuations. This is represented on the first tag or button as the fund's performance. A higher value would instill confidence and encourage investment in the fund. Second, compare the benchmark index returns performance to the fund. Did the fund beat its benchmark on 3-year rolling return over 10 years consistently? This is rolling alpha. If rolling alpha was always positive, you can safely conclude that the fund consistently beat its benchmark and is therefore a consistent outperformer. Moneyworks4me Alpha MF color codes funds on consistency of outperforming its benchmark. Green means it outperformed more than 90% of the time, orange if it outperformed 80 to 90% of the time, and red if less than 80%. So when you see a fund with green color for performance, you have a consistent outperformer, and the number you see is the average 3 years rolling returns delivered by it. This is perhaps the most important criteria for selecting a fund. The second color-coded tag you see is for quality of the fund's portfolio. Moneyworks4me has been assessing stocks for more than 14 years now. Based on the mix of stocks held by the fund, we assess the quality of its portfolio and assign a color. Green indicates a very good quality fund, since it has a large proportion of very good quality stocks. Orange is good, while red funds have high proportion of risky stocks and are less preferable. How do you find the best funds to SIP in? You can do this very easily on Moneyworks4me Fund Screener. Select the category of fund you are interested in, and you can see all the funds with the best funds on the top of the list. The default is the direct plan. You can change it to regular if you need. That is effective and simple to use, isn't it? You can find the top-class funds across various categories, shortlist them, and check out more details on the fund's 10-year X-ray. You can get lots of valuable information here that enables you to build confidence in your final choices with ease. You can use the link in the description for details. If you like the Moneyworks4me way of selecting funds, you can get our recommendation for the set of funds right for you. Just go to Funds4me and select your age group. You get a set of top-class funds that will grow your portfolio robustly. You can see the ratings and appreciate why they are recommended and that they are the best.